Hey everybody. Hi. When I come in here, my microphone's automatically muted. That is so weird. But I saw it this time. Last time I was going on and was wondering why the microphone was muted. I was like, what is going on? Why is the microphone muted? But hey, we're here now. We're here today on Sunday afternoon. I've done some church this morning. Hope a few of you have done some this morning, just to see, I need that in my life. I don't know if many of you do, but I definitely need some word and worship in my life for sure. For sure. I need some worship and praise in my world on a regular basis. And it's honestly not just on Sunday. It's not just on Sunday that I need the worship and the word in my life. I have to, it's a lifestyle. So I get that every day. Sunday is the day that is quote unquote set aside. So I'm going to go off on Instagram. It is not wanting to stay live. Something's going on over there with the connection. So I'm going to try again over on Instagram. If it works out this good time, then that'll be wonderful. If not, we press on without it. We press on without it. Oh goodness, the rain and the wind just picked up while I was sitting here talking to y'all. Okay, so it's Sunday. This is I guess I was almost getting ready to say it's our 2:00 live, but it's not 2:00 live because it's first of all not 2:00, and 2:00 live's happening during the week. What we're here today for, though, is to see what is coming this week in the coming market. What is up and coming this week in the stock market? Looking to see what is on the way. We got some interesting stuff coming this week. So that Instagram does not seem to want to go, probably because the weather is so wonky outside. Oh no, we don't want to share that. So I'm going to just turn that off and stick with just YouTube and Facebook. YouTube and Facebook, make sure we can see us on Facebook. Hope you can see me. If you can, please leave a comment. Say, hey there, hey there, hey there, hey there. Hey, Miss Deborah, how you doing? If the broadcast starts to look crazy, then let me know. I'm hoping it will stream in all the places. The weather is looking bad out here, so we'll see how that goes. All righty. Welcome again. It's Sunday. We're going to talk about what kind of things we're seeing in this upcoming market. What are we expecting to see this coming week in the market? We'll look at the meetings, the data. We'll look at the earnings stuff that's coming from this week. We'll look at a little bit of charting. We'll look at SPX. And I'm going to talk about XSP at the end. So if you're still hanging around, hopefully you will still be hanging around. Yeah, my internet is looking like it don't want to do. Let me close up some stuff and see if that helps us. I need those things to stay open. Okay, because it shows here that the internet is looking low. And I don't see it populating on Facebook at all. But we're going to press on either way. Again, we're going to talk about the meetings this week, what kind of announcements we should expect, how those things are probably going to affect us. We'll look at some charting. And at the very end, I'm going to talk about making money with XSP every single day. If you haven't heard of XSP, it's the mini of the SPX. It expires every day, and we make money off it every single day. We do. All righty. I'm going to go forward and share my screen so we can see what's going on here. Let me bring this over to here so we can see it. Sharing my screen. I'm presenting, going live, as they say. Good morning. It is Sunday afternoon, I guess. I keep saying morning, maybe because it feels like morning. It's morning. Nope. Don't do none of that. And we slept the night away. Yeah. Don't do it. Don't do it. I say don't do it. It happened. We fooling up, as they say. Where is there we go. I need to move stuff around so I can see. Shackles off my feet so I can dance. Knows how we just switch back between the song of the Lord and the unholies. Don't do that. Don't be like me. As Miss Silly said, don't be like me. Don't be like me. I didn't mean to bring that up, so I'm sorry. All right, here we go. So this week, as far as meetings and things go, July 9th through the 15th, we've got starting tomorrow morning or Monday morning right off rip, we've got FOMC member Barr is speaking, right? We got an FOMC coming right off rip. It's a yellow folder, but listen, when the FOMC starts to do stuff, you definitely not sure what's going on. It says it's a yellow folder. Yellow folders mean low volatility expected. Orange folder is for medium volatility expected. And a red folder means high volatility. Volatility. All right. So 10 o'clock tomorrow morning, we've got FOMC member Barr is speaking, and the final wholesale inventories month over month. At 3 o'clock tomorrow, we've got consumer credit month over month. Interesting thing, right? Consumer credit, from what I've read and understood, the consumer credit is going, people are going more and more into debt, trying to manage this inflationary situation because things cost more. Oh my goodness, things just cost so much more. So people are trying to manage these inflationary situations, and they're doing that by, spending more money and maybe going more into debt, right? Using their credit. On Tuesday at 6 in the morning, NFIB Small Business Index, way before the market opens. For us, if you trade futures, that probably would affect you. Tentative, though, we've got the IBD and the TIP economic optimism. That's tentative. Wednesday is where it starts to get interesting, baby. 8:30 in the morning, we've got CPI. CPI month over month, year over year, core CPI. So what is the CPI? CPI is our consumer price index. That basically is the pricing of the goods that the consumers are consuming. How much does stuff cost? How much has this gone up or down, right? This is our consumer. It's an indicator of the inflation because things are costing more. The goods are costing more, which goes back to that people using their consumer credit. Those things tie in together. At 9:45, FOMC member Kashkari is going to speak. Now, the CPI stuff is before the market, but even though it's before the market opens, it's red folders, which means it can have an impact on the market that day or that week or whatever. This information is important because it's going to be used by the FOMC to determine whether they need to rate hike again. They're using these consumer prices, the PPI, which we'll talk about in a minute, to determine what we need to do to hike the rates to keep the economy in the proper balance, right? These are important numbers. 10:30 in the morning, crude oil inventories. It's a yellow folder, but I have really seen that it's really medium volatility. 101, we've got 10-year bond auctions. That's an orange folder. And the beige book comes out at 2. The beige book shows up as a yellow folder because the beige book by itself is not a big deal. But at the same time, the beige book comes out. There's also like a red book and a yellow book that come out. There might be a brown book. I think there's 3 books that come out besides the beige book. And I might have the colors wrong, but I know there's more than one book that comes out. Those other books are the ones that have an impact, but they tell us about this beige book. The beige book is what they tell us about. That's on Wednesday. Looking at Thursday morning before market opens, we've got core PPI. This is the production or the cost to produce these goods. The cost to produce these goods, right? This is the PPI. So if the cost to produce goods is going up, this is not a good thing, right? Because the more it costs us to produce it, the more it costs us to, changes the pricing of it. I think PPI actually stands for, I want to say it was called performance. Oh, there we go. Producer price index. There we go. The price to produce these things. Producer price index. Unemployment claims come after that. Of course, that's important. If our unemployment is not getting maintained as well, if our jobs market is not as strong as it needs to be, and it wasn't last week, which means they're looking really close. It's kind of weak last week. Now we're looking to see what it is for this week, and are we doing any better? Natural gas storage, yellow folder, 30-year bond auction, yellow folder, federal budget balance, yellow folder. 6:45, FOMC member Waller will speak. This after the market closes, but it still carries an impact, because then we get to Friday. Thank God it's Friday when it gets there. Friday the 14th, 8, we got prices month over month. And then at 10 o'clock, we've got a red folder of preliminary U of M consumer sentiment and inflation expectation. Consumer sentiment is a red folder also because how the consumers feel about what's happening is important. If consumers are holding back their money from maybe those large house purchases, or they're watching their debt, or they're, how consumers are feeling and responding to what's happening, that's why that's a red folder. Because if the consumers are not feeling comfortable and all that good stuff, then that impacts other things, right? Consumers aren't spending money. They aren't vacationing. They aren't, prepping early for Christmas. People start early buying for Christmas. If people aren't releasing their cash to keep the flow going, that causes issues. So definitely consumer sentiment is important. Okay, so I've gone through the Forex Factory, which again, you can look here anytime you want, forexfactory.com. Shows the calendar. There's a lot of other information here on Forex Factory. And no, this is not about Forex, trading Forex. No, it is not. This is just a place we go to get the calendar information on what's coming up in the market. I only look at the USD stuff, even though I know that other markets do have an impact on ours. I only look at the USD markets because we could be here forever and ever talking about all the different markets and how they all impact things. Not saying they don't, just saying I'm not going through all of that on this call. Okay. So the investing.com calendar also is another place where there is meeting things and stuff posted. Sometimes they have things here that are not on the Forex Factory. So that's why I come here and take a check on this to see if anything comes out. Wholesale inventories. I definitely always look for the 2-star things. This is investing.com economic calendar. I just looked at investing calendar, economic calendar. 10 o'clock, 11 o'clock, we've got consumer inflation expectations on Monday. That wasn't mentioned on the other one. The bill auctions are there. FOMC member Bostic is speaking at noon. That also wasn't mentioned on Forex Factory. And at 3 o'clock, we've got consumer credit, which we did mention. Tuesday, FOMC member Bullard is speaking at 9. Wasn't mentioned on the other one. Red Book is at 8:55. Yeah. Short-term energy outlook, 3-star is at noon on Tuesday. 3-star, high volatility expected. EIA short-term energy outlook. 3-year note auction is at 1 o'clock. That's a 2-star. On Wednesday, yes, we've got the CPI stuff that is there. Looks like some mortgage things are mentioned even before that. Mortgage market index, mortgage refinance index. This is important things. As far as mortgage is a big old purchase and people refinancing, that means they're shifting around their debt. They're either pulling cash out or they're going further into debt. These are all important things. Crude oil inventories, we talked about that. The WASD report is at 12. The beige book is at 2. There we go. Thursday, we've got the core PPI. All of these things are related to the PPI. You've got bill auctions, federal budget, federal balance sheet, and federal budget balance. That's at 2 o'clock on Thursday. Woohoo, it's thundering outside. And then on Friday, the University of Michigan stuff is here. And then we go into the speculative, where people are setting their speculative positions for upcoming week or the upcoming month. Okay. Those are the announcements and the things that are coming about this week that can affect the market. Let's move on to talk about earnings. Now, this is important in that we've got some earnings. The banks are going to start reporting earnings on Friday. Monday, we've got Helen of Troy before the market opens. WD-40. I don't think I knew that WD-40 had shares, but WD-40, Saratoga, Call Amp, and E2 Open. That's all on Monday. Tuesday before open, we've got Berna, nothing after close. Wednesday, we've got NGO Dynamics, Thera, and Miller Knoll is after. But then that was Wednesday. Thursday, we start pulling out some airlines. We got Delta showing up, PepsiCo. PepsiCo is a good one for to ride through inflation, because even if a recession, if we have a recession, no matter what happens with in the world, we still need water, we still need drinks, and PepsiCo is that company. They provide more than just Pepsis. People think PepsiCo only does Pepsi. No, boo, they do a lot more than just Pepsi. Progressive Insurance, Centus, Conagra, Fastenal, NT, WePro or YPro, ABHR, I think that's a B, and WAFD Bank. This is where the banks are starting Thursday. I think this opens us up for banks even the week after next. We got JP Morgan Friday before open, United Health Group, Citibank, Wells Fargo. Here we go, State Street, BlackRock. These are all banks. Ericsson, tech company. These are the earnings that are coming out this week that are being anticipated, right? These are anticipated earnings for this week. If you trade any of these stocks, you also want to be very mindful when you're trading these stocks, how they're impacted by earnings, right? I've been working on or trying to work on a little earnings strategy. I've not fine-tuned it enough at this point to be sharing it with nobody, but we're still kind of working on it. Primarily I'm an option seller. So I'm looking at selling credit spreads, cash secure puts. I'm looking at things like that. Now, the volatility that usually surrounds earnings is not necessarily the greatest thing for a seller unless you got an indication that it's going to go a certain way. If you're real comfortable that it's going to go up or down, then you can trade that way. But if you're doing credit spreads, if you're doing iron condors and you're not sure if it's going to lean one way or the other, it's probably best just to wait till after they report earnings, see what what everything look like, what they look like though, and then go ahead and put you a trade on based on what happened after earnings. Now, I feel like, if you're buying and selling, if you're buying options, buying calls and puts, and you're doing earnings, you're really kind of YOLOing it. Basically, that feels more like a crapshoot to me, because, of course, you can use a straddle. Anybody knows about straddles? If you know about straddles, put a hey, yeah, me in the chat. If you do straddles, it's something that people do a lot in earnings if they want to trade earnings. They trade earnings with straddles. And straddles is basically where you buy, let me see, straddles. Oh, no, I didn't want all caps. Looking to the side because I'm typing in this chat here. Straddles may be a good strategy for earnings. That's the people who generally use it. Is for high volatility times, because you can buy a call and buy a put at the same strike price or just about, right off of each other, and benefit from whichever way it goes. So when one price is growing, the other one goes to nothing. As long as price has to move kind of drastically for a straddle to work out for you. But for those who know about straddles, there is maybe some opportunity there for you to use straddles for earnings. And I think I might have a video about straddles. So if anybody's interested in kind of knowing a little bit more about straddles, I think I got a short video about some straddles. But those are the earnings that we've got set for this week, right? Got the banks coming up starting this coming Friday. All right, so I wanted to talk next. Let's move on to our next thing. I wanted to talk about SPX and what it may do for this coming week. I've got to look at this chart, see what's on here, see what's going on. I had a buyer's gap earlier in the week. Last week, I charted the daily chart, and there was a big gap. That's why you see this green dotted line. That might have been Monday or Tuesday. I charted this and added this, and notice that by the time we got to Thursday and Friday, SPX jumped right into that gap. jumped right into that gap. I still would not consider it filled because I personally do gaps from body to body, not covering the wicks. And some people do wick gaps. If the wicks of these candles cover the price action, some people consider the gap closed. For me, I feel like it's a body to body. I'm trying to move this here. It's a body to body close, and if the body of the candles haven't closed that gap, then I personally don't consider it closed yet. Again, I think that's a personal preference to how you're trading gaps or how you're managing gaps. I think there's a good explanation for both sides, but that's how I do mine. I'm going to turn off this probability of expiring cone for now. I want to keep my I'll keep it here, but I'm going to turn it off as a study so it won't show, so it won't be on my chart as we're doing our charting here. Okay, come on back to where we were. There we go. So even though, there we go. Even though we stepped down and we have this gap here, which it wasn't a buyer's gap. It was a buyer's gap from here to here. Now this is changed to, it's a buyer's gap that is now a seller's gap because the gap was jumped up and then now it's gone down. So now it jumped down between these two, but I'm just going to change it to the word gap because it was a buyer's gap that became a seller's gap. And now I'm just going to call it a gap. Come on, let me type again. I don't see the text that's letting me type it. Okay, well, then that means that's not important. The gap is here between these two candles. That is what is important. And if we put another line up here, we now have another gap that has been formed. Boom, boom, that went from Wednesday to Thursday. There's a gap that was formed there when the price gapped down from Wednesday to Thursday. There's a gap here that's going to need filling, right? Let me change this to, I like to do the dotted line for the gap. It helps me to remember when I come back to my chart, what was this line? Because if you just put a whole bunch of lines on your chart and you don't have a nomenclature as to what is going on with the chart, you're going to be like, I don't know what I put this line here for. And that's going to be confusing. That's going to be confusing. You ask me, nope, that's not what I wanted you to do. Hi. Charting. I'm sorry for the clicking. I could just do it without the mouse, but then it slows the process down. And I don't want to be going slow, not too slow today. I'm not in any rush, but I don't want to be going any slower than I need to be going. Right? This is Sunday afternoon. People got things to do. Miss Deborah says, I would like to learn. I'll put a video out and then post the link. I have it somewhere. I have videos on lots of stuff. Lots of stuff is on videos. We've been recording videos for a couple years and learning strategies and fine-tuning strategies for a while. We've got some content, baby. We've got some content. Okay, so let's look at what else is support and resistance here. So if we're coming from our current spot, you're looking at your current place. This is the SPX chart, that daily chart. That means every candle here is a day's worth of data. Miss Deborah, if I don't put it out soon, like send me a message and remind me or something like, don't forget you were going to do the straddle video. Okay. Starting at our current spot, we want to go down and see where is support. Support on the daily chart would be down here in 43.28. Current price, the closed on Friday, we closed at like 43.98, looks like, just below. Yep, this closed 43.98.95, just below 4,400. The next support is down here, 43.28. If you want to see where there's some other, I think there's something that happened off in here. Sometimes I'll change the style to a line chart. You change it to a line chart, and then you can see if the price slows down somewhere. And you can see here right in this window where I was just pointing, around 43.77. Price does stop and stall in there. There's another point here to let you know there is some support and resistance in this area. So we're going to put a line up in here too, because something happened right up in here. Something happened up in here, 43.77. There is something going on. Yeah, there's something going on there. Okay. Let's go see what it is, what a TIE is that went on at 43.78. Go back to a chart. There we go. I was like, where this don't look like doesn't look like a. Let's go back to candles. All right, I put at 43.78 down here. You can see right in here, it dropped down, and it ran back up from here. So when I'm on the 15-minute chart now, and on the 15-minute chart, you're seeing a shorter time frame, which gives you a little more insight into what has been going on, what went on in shorter time frames within the day. What kind of support and resistance do you see within the day? Came down here. I think this was Thursday. Came down here, boom, hit up in here, went up again to the top of this, the gap we were just discussing, right? This is where we currently are. Something is in here, though, right in these lines, right around the 44.11, which is where the other line for the gap is. You see this a slowdown in here and a reverse, a little bit of a reversal, and it went on back the other way. So that was, we're finding support here. Looks like we've got some support at 43.85, and we may have some more. Let me see if I can get some shorter. We can get some. I need 15 minutes, but I need more. I need 15 minutes for more than a week. This is 5-day, 15 minutes. I need 15 minutes for more like a month. Time frame. You can add a time frame here. Yes, I am. I need probably a month is good. I'll go with a month. 1 month. And I need 15 minutes. Nope. Let's go intraday. I need 90 days. And I want 15 minutes. I'm going to add that. Apply. Okay. Let's go select it. The new one we just added. We need some 15-minute stuff so we can go and see. When you have these, when you look at the chart like this, you can see the peaks and the valleys. You can see the peaks and the valleys here to see what actually happened with the price. I was saying 43.85 is support, and I was looking for another one. And it looks like you can see right here where price stalled. This is around 43.69.70. So let's put us another line in that area. You can be, very fine-tuned, but just know every time you're setting support and resistance, you're looking at a zone. Support and resistance is a zone. It is not a hard line. Even though you put the line somewhere, the only reason I put a line is because I don't want my chart to get all, loaded up with stuff. But when you're charting support and resistance, you just need to know that they are a zone. Okay, support and resistance is a zone, not a hard line. All righty. I'm going back to the daily chart because now I want to look for resistance. Nope, going back to the daily chart because I want to look for resistance. It's got to fill in, go and get all this data and fill it all in for us so we can see what the chart looks like. I'm a fan of Thinkorswim. Y'all have heard me say that multiple times before, but I also actually, and it doesn't really pain me to admit this, but I do like charting on TradeStation. Their charting seems to be very easy to do over there. But now that I'm at Thinkorswim, I just do all of my charting here because it's all on one platform. That way I'm not charting in two places. I'm all in one place looking at what's going on. Looking for some resistance. I think I went back a year. Must be back pretty far. 44.89, 44.57 is where we currently have some resistance. And 44.89, I know I found this resistance last week. I want to say the last time we did this, that's another level of resistance up above us, just below 4,500. All righty. How do we use support and resistance? Well, you use the support and resistance to help you as a seller. We use it to help us determine our sell strikes. If we're going for one day or multiple days of a trade, we're looking for the sell strikes. Remember, as a seller, you don't want price to come to your strike. You want your strikes to be out of the money. So you want to find the strikes that are outside of where you think price is going to go. So that's what we use these support and resistance lines for, is to determine where should we get outside of. I want this, but I want to be outside of these numbers. Okay. Now I said I was going to mention XSP, which I'm here now. XSP is the mini, see here, mini SPX index. It expires every single day, just like SPX does. The chart looks very similar. As you see, if you look at SPX and then look at XSP, it's the mini, so it should look exactly the same. Yes. So what you're doing here is you're looking for, again, we're looking for the places where we believe price will not go. So we're charting our support and resistance, just like you would over on SPX. What I like about XSP as a seller is that it's a one spread. One spread means that the well, why did you do that? At one spread means that there's a one between the bid and the ask. There's only a one. So when you do credit spreads on XSP, the amount of collateral you need is only $100. When you trade SPX, you have to have $500 because each of the spreads on SPX is a 5 apart. Let me show you real quick what I'm talking about, so nobody's looking at going, what is she talking about these spreads? SPX, come on, baby doll. It's doing its thing. There we go. SPX, the difference between these two strikes on the vertical is 5 spread. So if there's 4,300, 4,305, then that means it requires $500 of collateral to do a credit spread on SPX. $500 of collateral is required. You're going to take in $120 in premiums, right? If you're at the money. So that's what you're leveraging the 500 and you're taking in 120 in premiums, but you got to leverage the 500 minus the premium. So you're really only leveraging, in this case, 380. But if you're doing XSP only has a difference of 1 between these two numbers. The spread between these two numbers is a 1. It's a 1. Now this number says 0.03. You open it up, it's really 21 cents. It's weird because sometimes in the option chain, it'll say one thing, but once you click into it, you get another thing. So it tells you that at the money, you're going to leverage the $100, but you're going to collect $21 in profit. Great thing is you can do 2 contracts, 3 contracts, 4 contracts, and you'll multiply that 21 by 1, 2, 3, 4. So if you don't want to put in $500 on one trade, you can do XSP with the 1 spread, and you're leveraging $100 per each contract. If you want to do multiple contracts, sounds great. If you want to do one contract for $100 here and then do a little lower on your put credit spread for another $100, hey, go for that. You can mix and match a little bit better. But the great thing, like I just said, is that XSP expires every single day. So our strategy, we talk about you basically enter your trade in afternoon time. You want to wait and see what the market has done a little bit in the day. You enter the trade in the afternoon time, getting strikes that you believe price will not come to again, and you let it expire worthless. And every day you're taking in a profit. Every day you're taking in a profit. If you all are following me on Facebook, you're seeing that I'm posting our return on collateral. Most of those are done with the $500 on SPX, but some of those are done on XSP. We have traders who trade XSP, and they may trade them both. They may trade only XSP. I like XSP because it doesn't require as much collateral. I can do 2 or 3 contracts if I want. I can, mix, rinse and repeat, or mix them up, mix and match, as they say, and put them in different places and just let them expire at the end of the day, and they expire worthless, saving us from using a day trade. Yeah, I have a whole strategy about that, credit spreads and stuff. If you want to check us out over at Educator2Trader. Also, if you're on my YouTube channel right now and you're watching me on YouTube, because the Facebook feed seems to be doing its thing. If you're watching me on YouTube, please subscribe to the channel. Continue to look around. I try to post good content to make sure that I'm value added content, not just posting to be posting, but I really try to post the things that people really need to know or would want to know. I'm trying to post what people would want to know, because everything that you might not want to know everything, but I try to post what people would want to know in their trading journey, things that are useful and worthwhile. That's my objective. Hopefully I meet it most days. Yeah, so let's talk a little bit about what we do. I said I was Arlissa. I'm Educator2Trader. I'm an option seller coach. I coach the seller strategies, covered calls, cash secure puts, credit spreads, and how to short. Those are the main 4. We do mix and match those around, which you heard me talking about straddles. I've taught on straddles before. I've taught debit spreads as well. I know how to teach the other things. We lean in on the selling stuff because we're the sellers. As a seller, you like the insurance company. People pay their premiums, everybody pays and buys, and the insurance company might pay out money for the claims, but at the end of the day, the insurance company is coming out ahead, right? When you're a seller, you're coming out ahead. People get kind of wonked up when they think about, I'm leveraging a lot of capital or collateral in order to take in smaller premiums. This can be true. It all depends on a matter of perspective. If I can leverage my $100, make $20 every single day for one contract, I may do 2 and make 40, and do 3 and make 60. And then I can rinse and repeat that same $100 over and over and over, day after day. Hey, that's a good way to do it. Those small wins add up. And I wouldn't even call them small. If you make $20 off of $100 of collateral, that's a 20% return on your money in one day. That ain't small money. Some people don't get 20% return in their portfolio the whole year. And we're talking about returning 10 and 15 cent collateral, 10 and 15%, collateral in a day, in 2 days, in a week. I'm with it. You just find out where the price is not going to go. And those are the strikes that you pick. If you follow me on social media, I'm at Educator2Trader everywhere. You'll see yesterday I posted some cash secure put trade ideas and some covered call trade ideas. Again, I'm not a financial advisor. None of this is financial advice. I'm just here to help the people. I'm here to help the people. I'm just here to help the traders, because I have been a trader who was losing. And I was like, this is right here. This right here is for the birds. This right here, this losing right here and handing away my money is for the birds. I need a strategy that I can rinse and repeat, that does not include me watching my screens all day long. I don't have that kind of time. Y'all know I'm an educator. So in the mornings, I'm teaching the next generation of college mathematicians. That's what I'm doing during the day. Well, the early part of the day. I finish at 12:30. But then I got to get home. Then I do 2 o'clock live. Every day, 2 o'clock live. Y'all look for me, subscribe, and come find me. 2 o'clock live. I do those every afternoon. I have my community. We have a membership where we trade together. We have a pre-market call that we talk about what's coming in the market for the day, what are anticipated issues, anticipated landmines, we call them, what's the good stuff that's coming. And if you're in a trade and get stuck, that community really helps to support you when you're in any trade. We're here for each other. We trade together. So if you're a newbie to options and you kind of don't have a clue what you're talking about, I don't know what you're talking about, covered what's and cash secured what's, you don't have a clue, then you need to hop in on Options 411. The boot camp, Options 411 2-day boot camp is coming up July 18th and 19th, couple weeks, a week and some change, 11 days, 10 days, 11 days, 9 days, 9 days. And We're going to do a broad introduction to options. We give you a good insight into selling options, and we move in from there, right? If you don't know about options, but you want to learn how to make consistent money, everyday money from options, because listen, this stock market is no respecter of person. Your color, creed, religious background, none of those things matter. If you can bring your money to the table, you can pull some of it out and put it right in your own coffers. That's what we're here to do. We're here to help you figure out how to pull money right up out of this market. You don't got to get it from the mud, get it from the market. I think I heard Wall Street Trapper say that, not really copying, but it was a good statement. You don't have to get it out the mud. You can get it out the market, right? Okay, I believe I've covered all the things that are of import. All righty, make sure you subscribe to the channel if you haven't. Follow me on social media. I'm Educator2Trader in all the places. All righty, if you want to learn about options, check us out, Options 411. You can go to my website, Educator2Trader.com. That's where you can look at the information about the membership if you want to be a part of that, where we trade together every day. Community matters. Okay? Community matters. Don't let nobody tell you that I can go it alone. What they say, if you want to go fast, go by yourself. But if you want to go far, go together. Yeah, let's go far. We want to be trading years from now. We still want to be generating resources. We don't want to burn out because we have allowed our own nervous system to take us out because we're trading alone and we don't have any balances or any checks, right? Speaking of checks and balances, I put out a video yesterday about creating a trading plan for yourself. If you don't have a trading plan, then you are setting yourself up for unsuccess. You got to have a trading plan. You must have a plan for this market because, first of all, this market ain't easy to dictate. This ain't 2020 market and 2021 market where you could just put your money in, throw it at the wall, and everything was going green. This not the market we in, boo. No, sir. No, sir. No, sir. We're not in that market right now. So check that video out. I released it yesterday, I believe, how to create a trading plan for yourself, right? Step-by-step plan on creating one. All right, 2 o'clock live happens every day, every market day at 2 o'clock is 2 o'clock live. Options 411 boot camp, July 18th and 19th. If you want to trade the SPX strategy that I was just mentioning, getting in every afternoon, the SPX playbook, it's running in the ticker underneath. The SPX playbook is $27 for the book, and you can, for a few extra dollars, you can get videos to go with it. And it's a way I've outlined the strategy step by step for you. It's got screenshots and pictures. You can follow along, everything you need there. And when you purchase the book, you also get access to a Telegram group that talks about just SPX stuff. You can come on into the Telegram group where I'm there to support you as you learn the strategy. All right. I really think I've covered everything. I want you all to have a really good afternoon, Sunday afternoon. Prepare yourself for tomorrow. Give yourself a break. You know, you have to let your nervous system, your psychological. I talked about that on Friday at 2 o'clock live, that trading is hard on the emotions and hard on your nervous system. And there's ways to minimize that. There's ways to mitigate that. If you haven't looked at that, go check that 2 o'clock live from Friday, July the 7th, I believe was Friday. All righty. We do two things in this community. Woo, woo, woo. We do two things. We stay green and we get this money. All right. I'm going to talk to y'all later. Look for me in all the places. Bye-bye. Bye, everyone.